Namaste one and all. Good morning. I hope you all are doing well. Today is December 9th, 2023, and yesterday Reserve Bank of India Governor announced its decisions about Monetary Policy Committee decisions and deliberations of the Monetary Policy Committee. The Monetary Policy Committee met on 6th, 7th and 8th December 2023. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, they have decided unanimously to keep the policy repo rate unchanged at 6.50%. So there is no change in repo rate. Consequently, the standing deposit facility SDF rate remains at 6.25% and the marginal standing facility MSF rate and the bank rate at 6.75%. The M.P.C also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that the inflation progressively aligns to the target while supporting growth. So, yesterday, while announcing R.B.I. Director Mr. Shaktikant Das, yesterday means on December 8th, 2023, while announcing he has taken some more decisions, those I will brief it now. First one is enhancing UPI transaction limit for specified categories. The limit for various categories of UPI transactions has been reviewed from time to time. It is now proposed to enhance the UPI transaction limit for payment to hospitals and education institutions. Please note down, it is enhanced for payments to hospitals and education institutions from rupees 1 lakh to rupees 5 lakhs per transaction. Earlier it was cap was there at rupees 1 lakh. Now they have enhanced to 5 lakhs per transaction. This will help the consumers to make UPI payments of higher amounts for education and healthcare purpose. In case of emergency, they need not go to anywhere and they can straight away through UPI transaction, they can pay up to 5 lakhs. And e-mandates for recurring online transactions, enhancement of limit for specified categories. This also they have taken decision, one more decision in M.P.C on December 8th, 2023, as announced by Reserve Bank of India Governor Mr. Shaktikant Das. E-mandates for making payments of recurring nature have become popular among customers. Under this framework, an additional factor of authentication AFA is currently required for recurring transactions exceeding rupees 15,000. If it is rupees 15,000 and more, exceeding 15,000, then automatically AFA is required. Now it is proposed to enhance this limit to rupees 1 lakh per transaction for recurring payments of mutual fund subscriptions, insurance premium subscriptions, and credit card repayments. This measure will further accelerate the usage of e-mandates. So, e-mandates for recurring online transactions enhanced from rupees 15,000 to rupees 1 lakh. Up to 1 lakh, there will not be any requirement of AFA. AFA means additional factor of authentication. And one more important for the banking and for the software companies, it is most important establishment of a cloud facility for the financial sector in India. Cloud facility will be given for financial sector in India. This is also they have taken decision. Banks and financial entities are maintaining an ever increasing volume of data. Daily, day by day, data is increasing. Many of them are utilizing the cloud facilities for this purpose. The Reserve Bank is working on establishing a cloud facility for the financial sector in India for this purpose. Such facility would enhance the data security, integrity and privacy. It would also facilitate better scalability and business continuity. The cloud facility is intended to be rolled out in a calibrated fashion over the medium term. So it is most important, these 3 points, please note down. Another 3 important decisions also, the RBI in its M.P.C taken decision, those are framework for connected lending, regulatory framework for web aggregation of loan products, and setting up of fintech repository. Framework for connected lending means the extent guidelines on connected lending are limited in scope. It has been decided to come out with a unified regulatory framework on connected lending for all regulated entities of the Reserve Bank. This will further strengthen the pricing and management of credit by regulated entities. This will be more useful for the regulated entities, which RBI has taken decision. Regulatory framework for web aggregation of loan products. The Reserve Bank had introduced the regulatory framework for digital lending in August or September 2022. I have already explained about the digital lending in one of my videos. The digital lending ecosystem also comprises of services that aggregate loan offers from lenders, called web aggregation of loan products, for guidance of customers or consumers. Several concerns relating to such web aggregation of loan products harming consumers' interest have come to Reserve Bank of India notice. It has therefore been decided to lay down a regulatory framework for web aggregation of loan products. This is expected to result in enhanced customer centricity and transparency in digital lending. Finally, setting up of fintech repository. Financial entities like banks and NBFCs in India are increasingly partnering with fintechs for better understanding of developments in the fintech ecosystem, and to support this sector, it is proposed to set up a fintech repository. This will be operationalized by the Reserve Bank Innovation Hub in April 2024 or earlier. Fintechs would be encouraged to provide relevant information voluntarily to this repository. So, fintech repository will function from April 2024, and it is being operationalized by the R.B.I.H. Reserve Bank Innovation Hub. Thank you very much for watching latest M.P.C guidelines or M.P.C decisions of Reserve Bank of India, which he has taken on December 8th, 2023. And I request you please watch all our videos. Our YouTube channel name is Suvarna Chundi, and please watch, share and subscribe, please. Thank you.